Welcome to this month's investment update. My name's Mark Gregg. I'm joined here with Greg Smith, our investment specialist. So Greg, been a massive, big month in the markets at the moment. Not that we have any data yet, but the Fed has cut rates. Are investors liking that?
They certainly are, and it was certainly a strong month for markets. So you look at the three major indices, they all hit record highs. So the S&P 500 was up 2.3%, the NASDAQ was up 4.7%, and old economy stocks actually also did quite well as well. So the Dow was up 2.5%. So they like that Fed rate cut. The earnings season got off to a pretty good start as well. Things sort of settled down a little bit on the trade front. Other markets weren't left out. In fact, Japan's Nikkei was up 17% during the month, went through 50,000 for the first time ever. And we weren't as strong, but we were still pretty decent nonetheless. The NZX50 was up 1.9%. But you're back to the Fed and the data. The US is in shutdown. It's actually now the longest running shutdown in history. So a lot of the agencies that produce data, which the Fed relies on, aren't doing so. They did get one key bit, which was the CPI or the inflation print, and that came in at 3%. So it was a little bit softer than expected. That gave them the green lights to put through another rate cut. So it was 0.25%, as it takes rates down to lowest since 2022. The other thing they did as well was they stopped their quantitative tightening or the balance sheet runoff. So that was quite key as well. But basically what Jerome Powell said afterwards was that tariffs are a risk to the upside to inflation, but they're more looking at the downside risks with the jobs market. He was pretty cautious about what they're going to do in December. No surprise really, because there's not a lot of data. He's saying there's no guarantee of a rate cut in December. Markets think otherwise, currently pricing in a 70% probability, but overall investors like that.
Great. Obviously, big tech companies seem to be at the front and center at the moment. So what's your view on the sort of the various announcements and sort of recent earnings coming from the big super cap tech stocks?
Yeah, sure. So those super cap tech stocks, interesting really in terms of some of the releases. So a lot of focus on how much companies are spending on AI. Is it paying off? And you saw some quite differing reactions, even though the results were quite strong. You saw investors react a little bit differently. And it really, I thought, highlighted the importance of a selective, active investing approach rather than sort of just going with the crowd with some of those reactions. So Microsoft and Meta, two big names, good results, stocks both sold off. Really I'm concerned around what they're investing in and whether they're executing. So that was interesting. And then we look at the other side, we had Alphabet, which is Google's parent. Now, there's been a bit of concern, I suppose, over AI, meaning that people aren't using Google search anymore. They are. In fact, they're actually optimizing Google search, and they're actually using AI tools themselves to get an even better outcome. So Alphabet did really well. That's actually a stock that's held in the Generate funds, and that was up 15% over the course of the month. The other interesting result, I think, was Amazon. So their cloud business is doing really well. So revenues there running at over 20% in terms of the growth. Similar for the advertising side as well. So Amazon's actually one of the biggest ad marketplaces in the world right now. Stock did really well, up 10% on the day. Had a really strong month. Another company that's held in the Generate funds, and also Apple. So Apple was up around about 6% over the month as well. That's also a stock that we own. The iPhone 17, I'm sure you've probably got the latest iteration there, Mark, running red hot according to Tim Cook, and described demand as off the charts. And it was only around that quarter, September quarter, only included about 11 days of sales for the iPhone. But going really, really strongly. Not just iPhones that are doing well, they're around about 50% of Apple's revenue, but your subscription side, so you think the cloud, Apple Music and the like, doing really, really well. And the old-fashioned laptop is actually back in fashion. MacBooks are going really well. They dropped the price, and that saw some strong demand there as well. And Tim Cook sees the coming quarter for Apple running at around turnover around about $137 billion. Fun fact is that's bigger than the GDP of many countries, including ours. So looking forward to a record-breaking quarter there. But overall, from those big companies or big super cap companies, differing reactions. Another interesting one I thought was a company called Lam Research. Now their shares are up 17% over the course of the month. Another stock that Generate owns, and they make the equipment that manufactures chips, and they are doing really well as well. Revenues up around about 28%. So it was really interesting, some interesting results across the sector.
Amazing. So what does that sort of mean in regards for earnings for non-tech companies?
Actually, the non-tech side did pretty well as well for differing reasons. So the big banks, as they always do, kicked off the earnings season, and you saw names like JP Morgan Chase, Citi, Wells Fargo and the like, Goldman Sachs do quite well. The ones with investment banking divisions did really well. Revenues going well there and earnings, and also lower interest rates are helping earnings as well for a lot of these banks, and that's a key thematic for Generate. The healthcare sector was also interesting, so it did well, but on the back of a fairly low bar of expectations. So we saw companies like United Healthcare do pretty well during the month.
Yeah, definitely. So come back home, obviously the Reserve Bank cut rates by 50 basis points. Was that a surprise? And also, what do you think sort of the next moves are going to be?
Well, it was a surprise to many, but not us. We've been calling for that. And I think the reality is that the economy needed a decent cut. Our economy's challenged on a number of fronts. So, tourism's doing well, and agri has been doing quite well, but a lot of other areas have been quite challenged. So, our manufacturing sector is in contraction. Consumer and business confidence surveys have been picking up, but from quite a low base. Unemployment, just recently, it's hit an 8-year high, 5.3%. So I think it was really important for the RBNZ, which is getting a bit of a new look, of course, of some recent appointees, to deliver a strong message to the economy that they're going to support it. And I think that's sort of what we got. Again, inflation is sort of running at the top end of their range, but they acknowledged that there is spare capacity in the economy, and there's certainly plenty of that. So I think that 50 basis point was the right call. In terms of this month when they meet, I think you could argue you could actually go the same, because they effectively take a break until February. So we had the transmission effects, as we talked about in the last webinar, coming through the economy, which is good news. Actually, speaking of transmission effects, I thought the other interesting announcement during the month was the Fonterra asset sale got voted through by farmers. So it's going to mean over $3 billion once that's returned next year, coming to farmers' pockets. Maybe some nice trickle-down effects into the economy. And just on that, we are starting to, it's a bit of a cliche, but we are starting to see some green shoots. And I think we saw that in a couple of announcements, and particularly from Freightways, which was another stock which performed really well during the month, another company we own in the Generate funds. And basically they said at their AGM that the New Zealand economy is no longer a headwind. So that was really positively received by that stock. But I think it's a sign of what's to come for the New Zealand economy next year, and something that the market will probably price in ahead of time.
Excellent. So going across the ditch with the Reserve Bank of Australia, so the rates remain steady on Melbourne Cup Day. Do you think that's it? Are they done?
Yeah, they were steady on Melbourne Cup Day. I'm not sure about some punters given the result in that race. I don't know how you fared, but it was a tough day at the races for those that were watching it. But they held rates, and that was to be expected really, because inflation came in a bit higher than expected at the last quarter print of 3%. So higher since 2022, and really the Australian economy is going along pretty well, much better than New Zealand's. Possibly also a reflection of the fact that the Australian Central Bank didn't raise rates as much as the RBNZ did. The RBNZ took rates up to 5.5%. RBA took rates up to 4.35%. So I think arguably, that higher rate sort of impact really shows in our economy. But for them, Australia sort of managed getting through the rate tightening process a lot better. They're quite possibly done for this year anyway. I don't think we're going to get a rate cut over there in December, but we could well get some going into 2026.
And Christmas is approaching. Only 50 days, if you can believe it.
Yeah,
it is, I know. What do you, sort of between now and then, what do you think investors are looking for? Yeah,
that's familiar themes that we've talked about. The earnings season, the next part of the earnings season will be interesting. We've got NVIDIA's results coming up. That's going to be super important for those large cap tech stocks. and are they continuing to deliver? That will have a lot potentially bit of sentiment. Although we are seeing other leaders sort of take over, as I've sort of talked about. I think the shutdown, that'll be interesting to see. Does it carry on? There's a few aspects to that. Are workers going to get back pay when it does end? It's already the longest in history. But then we'll also start getting some data, and then that's going to potentially provide the Fed with a bit more comfort, or not, to put through the third rate cut this year. So I think that'll be interesting. Trade side, we've seen China and the US both sort of back off a bit, offer olive branches on each side. We haven't actually got a written executed deal as yet, so there might be some interest in that and whether things sort of go from here. I think back home, our earnings season will also be getting underway for a lot of companies, so that'll give us a good taste of how the economy's faring, how corporate New Zealand is faring as well. And then, of course, the RBNZ, as we've talked about, is it going to be 25? Is it going to be 50? And in between, what's the data looking like? We've talked about green shoots, but perhaps it'd be great to see some more in some of the data that's coming. But yeah, plenty to occupy investors' minds over the next month or so.
Excellent. All looking very positive.
Absolutely.
Well, thanks once again, Greg. Well, join us next time for the next investment update.